Nigeria's external reserves have fallen by almost $1.77 billion due to leakages in the country's joint venture cash calls. Analysts argue that the drop in external reserves may inhibit the appreciation recorded by the Naira since the announcement of the new policy, which seeks to limit forex supply to bureau de change operators. We now cross over to London, where David Cowan, an African economist at Citi, is standing by to delve further into the story. Thank you so much, David, for joining us today. As I mentioned, we saw Nigeria's external reserves falling quite significantly by almost $1.7 billion. What is your view on this? I mean, are we seeing a sustainable drop in the external reserves, or do you think this is a blip in an overall positive trend?
Well, I think we've seen Nigeria's foreign exchange reserves declining steadily for the last sort of 2 years, if you look at it. And I think what we're really waiting for to see is whether we've bottomed out. Now, the announcement by the central bank that you referred to, reducing the amount that the bureau de changes can buy at the auction through the commercial banks, I think may well be a crucial element in this. I think what we've seen over the last 18 months, 2 years, is a very, very high level of demand for foreign exchange, despite high oil prices, which have obviously helped on the inflow side for the central bank. And what they're trying to do, the central bank, is they're trying to start reducing that demand, and eventually, that hopefully will see either reserves starting to pick up at some time in the coming months, certainly stabilizing going forward for the rest of the year.
Well, David, I mean, at the end of the day, we've got oil prices which are sitting at $112, $111 a barrel. We hit 120 not too long ago, and we're seeing a bit of a disconnect when it comes to oil prices and production, especially when it comes to Nigerian production. Do you think that Nigeria is losing out on the current high oil prices?
Well, I don't know if it's losing out on the current high oil prices. I mean, I think the interesting question is that people have been asking, as Nigerian oil production has picked back up again against this background of high oil prices, why haven't they been able to build reserves? I mean, we know why they ran down reserves, but the question then going forward is, I guess from my side, is that we still haven't yet seen this easing of demand for foreign exchange in Nigeria. But I think we're pretty much close to that point. I mean, if we look now compared to where we were a year ago, things have distinctly improved by a considerable amount in Nigeria. A year ago the politics was uncertain, interest rates were very low, the banking system was in severe crisis. Now we're through the elections, the president is putting together a cabinet, interest rates have picked up, and the banking system is moving forward in terms of its resolution. So I think the key question you're asking in this is, when will confidence return in the Naira? Will we see Nigerians buying Naira or holding Naira over foreign currency? And I think we are pretty close to that point yet. And then I think we'll see over the next 2 years, certainly, that Nigeria continues to benefit from the high global oil price going forward.
Well, it's interesting you're saying that we're starting to see a change in sentiment when it comes to buying Naira, but that could change very quickly as well. With regards to foreigners also buying Naira, do you think that that is a possibility down the line, or do you think it's just left to locals?
I think it is a very distinct possibility, and I think the central bank is calculating on that very much. I mean, what we saw was, in addition to the legislation on the bureau de changes, on the 24th of June, the central bank reduced the holding period for foreigners, or in fact, it abolished it from 1 year. And that meant that a lot of foreign investors, portfolio investors, who had been looking at Nigeria but were put off by the 1 year lock-in, are now increasingly interested in Nigeria. A lot of them did their homework in relation to the Eurobond issue late last year. They're quite comfortable with the Nigerian story. And you would certainly expect now, with the move in the currency, reasonable interest rates, that foreign investors will be looking much more positively at Nigeria. If that money comes in and goes into reserves, then that could well be the trigger that sees reserves starting to build up again over the rest of the year. That's what we'll be looking for in the coming months.
How much emphasis needs to be placed on Nigeria's import bill? Because we know that a large chunk of what we're seeing coming through, importation of petroleum products in particular, are very key with regards to the FX markets at this stage.
Yeah, I think the import bill is an interesting case in Nigeria. I mean, Imports have been high. Yes, they do export a lot of oil. They also import refined petroleum products. But what's been interesting in 2009, 2010 in Nigeria is that while Nigeria's been running a current account surplus, it's actually been running a balance of payments deficit. That particularly relates to the errors and omissions, which brings back to my point that what we've seen, I think, is the high level of demand for foreign exchange by locals in the last 2 years. Now, going forward, whatever happens, I still think this year Nigeria will continue to run a significant current account surplus of 10%. What we're really interested in is the financing side underneath that. Are they starting to attract enough capital flows back into the oil industry? Are we seeing that Nigerians are bringing their money back into the country? And also, as we talked about, the foreign portfolio investors. So it's all that financing of the current account debt surplus or the underlying items that's crucial in understanding how the Naira will perform going forward for the rest of the year.
Okay, let's look at some of the targets that you put in place for the Naira relative to the US dollar. Some say that it could hit around 145 or so. Your view, what is your target at this stage? I mean, you're talking about foreigners becoming more interested because of the changes in regulation, and given the fact that Nigeria overall is looking far more stable, can we have a more bullish outlook for the Naira going forward?
Yes, I mean, the central bank governor came out recently and was widely reported as saying that he was looking at a 145 target at the end of the year. My own suspicion is that we've seen this very rapid bounce back down to where we are now, about 151 in the last few weeks, or last week actually it's been. And while I could see the Naira gradually heading higher, I do think that the emphasis from the central bank will be on rebuilding reserves rather than allowing considerably more appreciation. So I would be surprised if we got to 145, but I certainly can see that we end up the year high 140s, 148, 149. I'd probably say we'll end up about 150. And the central bank will be thinking a stable exchange rate against a tightening fiscal policy and its own tightening of monetary policies that should then hopefully start to bring down the inflation rate, which is sort of its thinking all that. At the same time, as you said, I think we see confidence returning to the Nigerian economy. Now the elections are over, the oil price is high, and hopefully we'll see the new administration starting to push ahead with much needed economic reforms.
With regards to building up foreign reserves, what is your view on the importance of Nigeria having a very strong foreign reserve scenario that is playing out? And where would you say that it's fair, just alluding to the fact that we know the external reserves fell to 31.7 last Friday. It is currently sitting at a 6-month low, and just to reiterate your point, we're starting to see a steady decline in this. At what level would you be comfortable?
Well, I don't know if we're looking at a level to be comfortable. I think what we're looking at is the trend. Right? I think it's very hard to say whether Nigeria should have 8 months of import cover or 10 months of import cover. I think what we want to do is, when you think about Nigeria, say the last few years, the government has run down a considerable portion of its savings, not only in the foreign exchange reserves, but also in the excess crude account. And really what we want to see forward is not necessarily a level, but a trend, seeing reserves going back up. You know, it doesn't really bother me too much whether they're 35 billion at the end of the year or heading towards 40 billion, but they're going in the right direction. At the same time that you're seeing the government make payments back into its new sovereign wealth fund. And I think it's that. You're looking at a direction at this stage rather than worrying about absolute levels of where we're going to go in terms of this. And so, you know, it doesn't really matter too much whether you set 35 or 40 billion target at the end of the year at this point, I would suggest.
David, just to reiterate some of the monetary policy scenarios that are playing out, as we know, inflation, of course, is an issue. We're still seeing very high interest rates for consumers in Nigeria. We're starting to see investment in these countries growing quite a bit. We know the banking sector has stabilized through AMCON. Your overall view on the Nigerian economy, are you overall confident that we could be seeing a much stronger growth rate going forward, coupled with a strong local currency?
I don't think we're going to see a much stronger growth rate, but I certainly think we're going to see a stable Naira for the next 2 years. Perhaps it will move a little bit higher, but not significantly. I think you have to remember the growth pattern will be quite complicated. We've seen a rebound in oil production recently against a background of a strong fiscal stimulus in the run-up to the elections. As those are taken off, but private sector investment comes to fill the gap, it may well be that the growth rate just stays where it is, and at 7%, that's still a very high rate by African standards. So I think, yes, we are positive for the next 2 years. Growth staying in the 6.5 to 7.5% range against a stable currency, and hopefully they'll manage to get inflation down into single digits, which by Nigerian standards, if they can do that over the next 12 to 18 months, will be progress compared to where they have been recently.
Fantastic.